Now for a look at the local markets. Earlier I spoke to Martin Lakos from Macquarie Private Wealth. Martin Lakos, a solid dose of RBA speak today. What would the market be paying closest attention to?
Yeah, Tiki, there's certainly, out of the minutes, a couple of key points. The Reserve Bank's certainly going to be watching the CPI number, the inflation data that's due out on the 28th of July. It does look like that they're looking for a 0.8% for that June quarter. Anything above that would give them cause to be concerned, and certainly they're focusing on wages growth, without a doubt, with that unemployment holding 5.1%. And they're also going to be very much closely watching, that comes out this Friday, the stress testing for European banks, and in particular to see how markets react to that. Now, if we see, as we did in the United States, that the stress testing went reasonably well, an overreaction by markets would be a concern by the Reserve Bank. So there's a couple of issues there that are in the balance. If that inflation data is above expectations, we would expect to see the Reserve Bank raise rates by 25 basis points in their August meeting.
Back to today, it's been a broad-based recovery. Any sectors doing notably well?
Yeah, look, we've had a rebound today, a bit of a slow start, but volume is starting to pick up, and certainly the materials sector is doing quite well through the day, as is, in fact, utilities.
And consumer discretionary and consumer staples up strongly. Does that surprise you?
Look, a little bit surprising. Stocks like Wesfarmers and Woolworths doing particularly well on the consumer staples side, but it's the media stocks that are driving the consumer discretionary, and that's largely because there's now numbers running around the market of at least $10 million of additional advertising revenue to come out of the election advertising process, and we're seeing those key media stocks rallying on the back of that today.
Looking offshore again at the US reporting season, so far earnings have been a bit above expectations. What's that telling us?
Yeah, look, going into the reporting season, analysts over there were looking for overall earnings up about 26% on this time last year. They currently are running up about 28%, which is pretty solid. And in fact, last night we had some pretty good numbers, particularly out of groups like oil drilling services group Halliburton, which showed a profit up 83% this time last year. What the key takeaway, however, is that revenues are flat or down against expectations. So companies have done very well cutting costs in the US. Their balance sheets seem to be returning to reasonably good shape, but we're not really seeing the kick-on in revenues. That might well be a reflection of a mid-cycle pause in the US economy. And a couple of things obviously impacting that. Clearly, they're not seeing a big move on unemployment, so the consumer is still not starting to spend, and housing is starting to slow a bit there in the US. So those are areas we're watching pretty closely. But overall, the reporting season so far would have to be deemed a success.
All a bit austere too. Martin Lakos, thanks for talking to Late Line Business.
Thanks, Tiki.